Okay. Good morning, good afternoon, or good evening, depending on where you are in the world, and welcome to today's webcast. Financial tech is exploding, and our panel of experts discuss financial tech, how it's exploding, and how to capitalize on it. This is brought to you by VentureBeat and Yodlee Interactive. I'm Ruth Reeder. I'm a reporter for VentureBeat, and I'll be your moderator today. Today, our panel participants will be Rich Karlgaard. He is an economic forecaster, angel investor, board director, Wall Street Journal best-selling author, and a Forbes magazine publisher. Rich just released the #1 Amazon bestseller in strategy and competition called The Soft Edge, where great companies find lasting success. Tom Peters wrote the foreword and Clayton Christensen wrote the afterword. Rich writes a Forbes column, which is known for its witty assessment of business and technology. He has been a regular panelist on the television's Forbes on Fox show since its inception in 2001. Mr. Karlgaard is a serial entrepreneur. He has launched Upside and Forbes ASAP magazines, the venture capital firm Garage Technology Ventures, and Silicon Valley's premier business and technology forum, 7,500-member Churchill Club. For this and other achievements, Rich is a past winner of the Ernst & Young Entrepreneur of the Year Award. Rich Karlgaard was raised in Bismarck, North Dakota, and graduated from Stanford University. He lives with his family in Silicon Valley. Next up, we have Sunny Singh. He is the Chief Commercial Officer of BitPay. BitPay is the largest processor of Bitcoin in the world and has raised over and has raised over $30 million in funding from top investors like Founders Fund, Richard Branson, and Index Ventures. Previously, Sunny was part of the founding sales team at Jumio, where he was the vice president of sales and business development, responsible for signing half of the top 10 internet companies. Prior to Jumio, Sunny was part of the founding sales team at Image Systems, acquired by Microsoft, and a sales manager at Niku, acquired by Computer Associates. Sunny is a frequent speaker on payments and e-commerce. He is also an advisor to Lumia Capital and is an angel investor in several companies, including TwoMogul, GetAround, Jumio, SendHub, and Estate Assist. Sunny has an MBA from Thunderbird, is a graduate of Binghamton University in New York, and studied at Cambridge University in England. And last, but of course not least, we have Joseph Polverari. He is the Chief Strategy and Development Officer, Managing Director at Yodlee Interactive. As a Chief Strategy and Development Officer and Managing Director of Yodlee Interactive, Joe Polverari is focused on making the Yodlee platform available everywhere that value can be created by entrepreneurs, partners, and developers building digital financial apps and services. A member of Yodlee's executive management team since 2000, Joe brought with him considerable experience in multinational strategic, transactional, and operational initiatives in the financial services and enterprise software and services markets. Prior to joining Yodlee, Joe was with Pandesic LLC, an e-commerce platform provider and joint venture between Intel Corporation and SAP AG, where he held several positions, including Chief Operating Officer. In addition, Joe was Senior Vice President and Associate General Counsel at InsWeb Corporation, an online insurance marketplace, where he was responsible for the company's initial public offering. He was also Director and Senior Business Counsel at Seagate Software, Inc. So those are our panelists, and they are up. So let's get started talking about how FinTech is exploding. There have been significant macro trends that are rapidly reshaping the financial service industry, and as a consequence, it is more focused on technology innovation than it ever has been before. In 2013 alone, innovation enabled by new consumer behaviors, technology, regulations, private FinTech companies raising nearly $3 billion in funding mean that tripling the $930 million invested globally in FinTech in 2008. With the emergence of these new and disruptive FinTech technologies, we're seeing banking relationships move from traditional brick and mortar to more pure digital environments, and the growth of non-bank services that are competing with traditional bank services. So let's see what our panelists have to say. Let me start with Joe. Hi, Joe. What do you think, from your own perspective and relative to your particular experience, why do you think that FinTech is such a hot investment area, both for, obviously traditional banks, but more so for, disruptive startups?
Thanks, Ruth. Good morning, everyone. So I think it's a pretty clear answer from our seat in the industry, and we've been at innovation and financial services for the better part of 15 years now. And if you really look and think about what you do on the internet, you search, you shop, you communicate, and you deal with your money. Searching, shopping, communicating has been made very easy and very much intertwined with your life. Dealing with your money, banking or other sorts of financial services has not. So I think the reason that it's such a hot issue now and a hot area and actually accelerating in terms of progress is that there's actually a vacuum there. There's no easy way for you to deal with your money online in a very consistent and cohesive format from a digital experience perspective. And so what's happening is, I think we all thought the banks were supposed to be the place that happened. It did not. And so, as is often the case in the private sector, when there's a big opportunity at hand, very smart, very agile, very aggressive entrepreneurs come in and begin to disrupt. And that, I think, is exactly what's happening in the space today. So there's a vacuum that's been created over time relative to the rest of the digital landscape, and now that's being filled.
Excellent. That's a great insight. So I'm going to then ask the same question to Sunny Singh, Chief Commercial Officer at BitPay. As a disruptor, in the financial sector, what do you think? What's the interest?
Yeah, hi, Ruth. Great to be here. Welcome, everyone. So I've been involved in many startup companies that are trying to disrupt the payment industry, and in the financial sector, cash, credit cards, checks, are the main way people have paid since the 60s, and they were not designed for the internet. Technology has been evolving rapidly with the addition of the internet, mobile, things like that, and the banking system has just not caught up with that. Huge inefficiencies exist. There's, middlemen involved, fees involved, things like that, and there just has to be a way that, to leverage credit cards, cash, and checks to make it more efficient now for the internet, and that's what's having all these startups now come into effect into the ecosystem.
Because we're seeing such a technological shift, I wonder if this isn't in part due to, millennials and the rise of sort of the technologies that they're used to. We have a whole new generation of banking customer that is emerging and just changing the way we even think about banking. Rich, with the rise of millennials and this sort of change in demographic, how do you think that's impacting digital financial services, and sort of what are the expectations from these millennials, and how is that changing financial services?
Well, there's millennials, and then there's also just the vast population out in the world, and I think both need to be addressed here. I'll take the world first. Various estimates will say that there are about 2.5 billion people who have access to the web right now. We're moving toward 3 billion very rapidly, and behind the 3 billion will be yet another billion. So we'll have 4 billion people with web access pretty soon. The next 1.5 billion have very little or no banking access at all. So there's this huge opportunity out there. Now, they're not, on the whole affluent people, but somebody's going to create vast new markets reaching the unreached. And I think when you think about the millennials in developed countries and in the United States, ever since the financial meltdown of 2007 to 2009, the recession, and then particularly the financial meltdown part of it in the middle, every poll among Americans shows that trust in institutions, particularly in financial institutions, has collapsed. And millennials are leading the charge here. So there's this huge opportunity out there in the world, and I think within the developed countries, millennials will drive it.
How do you see them working in a broader world economy where people don't have as much access to banking institutions?
Well, I think if Mark Andreessen thinks Bitcoin is the real thing, then I'm going to vote with Mark, because Mark's often right on these transformative changes. But when you look at the political situation around the world in coming out of this recession, there's been just central banks around the world, led by the United States, have poured an enormous amount of liquidity into the system, trying to restart the economy. This has lowered the value of currency. Now, it's not showed up yet as consumer price index type inflation, but it showed up in spades as asset value appreciation, from houses to stocks to collectibles and so on. And so there is this feeling out there that the dollar is not a reliable currency, nor is anyone else's. And I think, again, this goes to the point of trust, where Bitcoin or other currencies like that are going to come in and probably fill a void that will shock central bankers around the world. They won't know what to do with it.
Hey, Sonny, from your perspective, how much does this demographic play into the planning of financial products for you?
It plays out a lot, obviously. Being as the leading company in the Bitcoin space, Bitcoin is largely a younger demographic. It's 40% U.S. based, so 60% international. Very tech savvy, very affluent crowd, and they like using Bitcoin because they see it as a way of lowering interchange fees. It's cheaper, it's quicker, easier to use, and also allows for cross-border transactions too.
Do you think there's more of an interest, sort of as we globalize as an economy, more of an interest in international exchanges?
Absolutely, yes. So a lot of people, by accepting Bitcoin, right, you're opening your doors up to a whole international perspective, right, where normal people in the dollar are just focused in the United States, people in Euro just focus in Euro. Here, Bitcoin is actually becoming a global currency, that's the digital currency for the internet, and obviously the internet, as we just talked about, is global, ubiquitous, almost 4 to 5 million users pretty soon, and this is a currency that really moves throughout borders.
All right. So we get sort of like the basics. We know that this is a hot topic, right? We know that FinTech is hot right now, payments are hot right now, and we know that millennials are sort of driving that charge in a way. So now let's sort of take a look at both sort of the present moment and also with an eye towards the future. So my next question I'll ask Joe. All of this sort of seems to mean that it may be easier for smaller startups to create new platforms and new technologies, and I would love it if you could just talk about that space for a little bit and sort of how people are able to leverage all these great technologies that are out there.
Thanks, Ruth. I think there's a couple ways to look at that. I think if you're talking, it depends what size startup you're speaking about. If you're speaking about someone who's got an established company or a platform that's actually getting into financial services, I think it's sort of in one direction. If you're talking about a de novo startup that has a feature or an idea set, it's probably a different sort of direction. In the first instance, it's more just a bolting on or an addition or an expansion of features. Say if you're Amazon and you want to go into banking, you've already got a lot of infrastructure from a corporate perspective set up. You've obviously got a leading shopping platform, shopping aggregation platform, and the ability to fulfill through that, and you're just adding the ability to move money behind the scenes and ultimately perhaps hold deposits, and then maybe moving that capability internationally. I think getting there from an Amazon perspective is different and actually probably perhaps less innovative than getting there from a startup perspective. So the Amazon perspective is really just moving into an area that had been traditionally occupied by banks in terms of holding money and moving money, potentially. In the startup case, I think you're actually talking about broader disruptions, and I'll give you a couple of examples. The area of wealth management in particular is one that is really ripe for disruption, in fact being disrupted very rapidly every day. The traditional use case there had been you go in, you get a wealth manager or a wealth advisor, you bring them a shoebox full of statements, they give you a financial plan that's probably 3 or 4 months out of date, and you hang on to that for 5 or 6 months, and then you revisit and reload. What's happening now in the market today is actually this whole process of being digitized. So you've got a number of solutions out there. LearnVest is one, Personal Capital is another you may have heard of, that are actually building solutions that are they're hybrid digital and human-based. So you do most of your interaction through a digital medium, and you do a little bit of interaction over Skype or on the phone with an advisor only periodically. But the advantage you get actually is a much slicker process, a smoother process, more up-to-date information, and better planning. And the way that is enabled is on platforms that allow you to get access at scale to data and payments information. And so really the platforms that are enabling this, we have one platform. It happens to be the biggest one in the industry. There are other platforms out there as well that are not quite as well scaled that allow you to deliver the raw material that it takes to innovate in these different sorts of spaces. So I think, again, in the Amazon case, you're just really fulfilling what banks used to do. In the entrepreneurial case, you're actually talking about true disruption in a way that takes existing players out of their traditional business models and ultimately out of their positions in the industry.
Interesting. So I'm going to piggyback on what you just said and ask you, what do you think the hot categories are right now?
Yeah, wealth management is definitely one. Lending is another, right? And lending used to be the primary vocation of banks across the spectrum, from high net worth down to lower net worth or underbanked, and then in particular in small business. And you're seeing literally dozens and dozens of companies on a global basis now disintermediate the banks through a combination of private capitalization and more sophisticated underwriting techniques that are all digitally driven. So that's another big one. There are also other areas that are hot, such as digital identity. I think we're fast approaching the area or the era when we will have the ability to determine you are who you say you are simply by your digital footprint. There are folks who think we're there already. And then I think just in the context of direct-to-consumer or direct-to-user financial management, I think you're seeing a lot of companies that are actually building in what I would call lifestyle banking or lifestyle finance, so that they've smartly figured out that the secret to getting you on their platform for a financial services perspective is actually making sure that the way they deliver their services ingrained in your life or integrated in your life. So it's actually flipping the paradigm of you used to go to the bank, now the bank or the banking services come to you without asking or without even having to go anywhere. So those are all categories that are growing very, very rapidly, and unfortunately for the banks, largely at their expense.
Wait, largely at whose expense? At the bank's expense?
Largely at the bank's expense. And if you think about, they've occupied a preferred space in the economy, really, because it was not quite a monopoly, but it was definitely a closed market. And they were very good at defending their competitive commercial territory. What you're seeing now, for a number of reasons, is the ability for banks to be disintermediated, none the least of which is sort of their poor brand perception in terms of public perception these days. The heavy legal and regulatory overlay that they've got on their businesses in general, their natural bureaucratic nature, and I can say that only with love and respect after 15 years of working with them. It's hard to get things done at a bank. And then the fact that they're still recovering from the meltdown. They have not got a lot of spare capital to throw at innovation when they're still shoring up the backside of the meltdown from a risk perspective.
So on that note, I want to throw a question to Rich. Hi, Rich.
Hey.
I want to see what you think about this.
Sure, and I just want to say a word about the sheer amount of money when you're talking about Apple, and Walmart hasn't been mentioned yet, and other players that are getting into this space. I mean, you mentioned in your introduction about the $3 billion that have gone into the startup end of FinTech in 2013, and surely that number will be up in 2014. But look, Apple has $150 billion of cash. Walmart is richer than most countries. You have the credit card companies like Visa, MasterCard, American Express. You do have the traditional banks, and they're all going to be vying for this space, partly because of opportunity and partly because of everything Joe said about the fear of disruption. So it's just going to be it's going to be the mother of all battles, drawing in well-capitalized startups and well-capitalized large companies from the middle of banking and from the periphery of banking and from completely outside of banking. And so I think what's going to happen is that customers, to get to the trust question, certain demographic groups will trust Walmart. The middle of the country, maybe not where most of us are today, but out there in the red states, Walmart is a very respected company, and it's certainly a very financially healthy company, and they want to get into banking, and generally everything they do pretty well, and they're not a dumb company, and they've got more connections into Silicon Valley than most people know. Other people will trust startups. Other people will trust Google. Every time I open Chrome, a box comes up, and Google wants access to my Dropbox information. I don't know what that's all about, but when I see stuff like that, I check Google off the list. I'm not going to trust Google if they get into the financial space, if that's what they're all about. So, I think in this vast world of 4 to 5 billion people who are going to need next generation banking services, we'll kind of pick our tribal favorites.
Let me actually jump over on that same note. I want to jump over to Sunny for a minute because, Bitcoin sort of offers this other opportunity for banking that's not affiliated with the banks, but it's also not, you don't have to worry about, Google picking off your information, or Facebook for that matter. So, Sunny, where do you think that trust will play for consumers and the choices they make?
Yeah, no, it's a great question. Obviously, Bitcoin is a decentralized currency, so it's not backed by any government. So that has pros and cons associated with that. Where, most millennials, today, they haven't ever really stepped foot into a Bank of America to write checks anymore. They don't do that kind of stuff. Their trust is with Google and Apple and Facebook, who they work with every day. And since the banking crisis in 2008, the banking trust with them has really dropped. So they really trust technology companies, I would say, like an Apple, Facebook, and all that. And Bitcoin kind of sits in the middle. They're familiar with Bitcoin. They've used it a lot. But until merchants like Apple, Google, Facebook, Amazon start adopting Bitcoin, right, it's still going to be on the periphery for them. And as every day more and more merchants start adopting Bitcoin, though, we're seeing Overstock, Tiger Direct, Newegg, Dell, Expedia, all taking Bitcoin now. That's gaining the trust more of mainstream America as well as millennials.
Now it's sort of a bigger question, and I'm going to direct this one back at Rich for a minute, is how can financial institutions and these not new companies, but non-banking companies like Amazon, Walmart, et cetera, and even the small startups, how can they capitalize on this opportunity?
Well, I think everybody is going to try to figure out what's the winning ecology, because it's going to take more than one company and more than one technology to put together an ecology of banking and financial services that is large enough to serve the world and enjoys the benefits of scale. On this point about disruption, when the Harvard Business School professor Clayton Christensen wrote his book, The Innovator's Dilemma, in the late 90s, since then, I think that was such a wake-up call to large incumbent institutions that, I don't think they're quite as vulnerable to disruption. They're awake to the facts. I was talking to the chief marketing officer at Citibank, and she says there will always be banking. We don't know if there will be banks. Now, that's a pretty interesting question. That's not a question that a lot of companies in the past would have asked about themselves if they were incumbents riding high in their industry. So we may see this, we may see that these large financial institutions are going to look at Silicon Valley startups as they're going to outsource their R&D effectively. The pharmaceutical industry kind of outsources its R&D to the biotech industry in many ways, and that's more of what we could see. And so the most visionary companies, I think, with the combination of great leadership, great technology, a great network of smart people, and that all-important trust factor will probably be the winning combination.
Interesting. And Joe, I want to ask you the same question. Where do you see the opportunities for capitalization in this hot market?
Thanks, Ruth. In terms of where specific investments will be placed?
Yeah, well, not necessarily. Well, it depends. I think what I'm asking more is sort of like, how can these companies either create products that will resonate with people, or, where are the real opportunities for non-bank entities to tap into the payments and financial tech market?
Great, got it. Thank you. So the honest answer is I don't know, but the ecosystem does, and I'll just give you a little bit of our perspective. We've got several hundreds of non-bank entities on our platform today, and they cross about 35 different sub-vertical markets, all with some relationship to financial services and or your money. When we started the Yodlee Interactive business about 3.5 years ago now, we had an idea for about 5 verticals. And what we quickly found out is the crowd, not unexpectedly, was smarter than us from the entrepreneur perspective. And they came in and said, oh, have you thought about using the platform for this? Have you thought about using it for that? We can create disruption here or there. And we're literally in 35 sub-verticals now, and that ranges everything from automated tax prep, automated divorce dispute resolution, targeted marketing based on financial data, the creation of entirely new data trends predicated on the aggregation of financial data, and then the traditional ones we already covered off a little bit earlier around direct-to-consumer financial management, wealth management, lending, those sorts of things. So I think there is no specific area to capitalize. I think it would be easy but somewhat cliche to say, well, you should figure out mobile payments. Well, the answer is all of us can figure out mobile payments. The question is who's going to be more successful at marketing it. You should figure out mobile banking. All of us can figure that out. The question is who's going to be more successful marketing it, and what that really means is, what that's code for is who can build the solution that is most integrated with your life and takes the friction out of dealing with your money, That's who's going to win, and I think the answer to that question is there's not going to be any winner. There's going to be regional winners, there's going to be local winners. The winner among the student body at Stanford University will be different than the winner among the mass affluent group in Chicago. It's just going to be very regional and very local, and there's not one answer. There's no Facebook of banking that's going to fit for everybody at some level. It's just going to be bit by bit and piece by piece, and then if you multiply that across 35 different sub-vertical markets, I think the opportunities are endless. The good news is, if you're in on the ground floor, you've got an opportunity to take a disproportionate share of market and build from there. So I think we really are at the tip of the iceberg, I believe, in terms of the proliferation of new and diverse financial services, but it's never going to be one size fits all, because your money is a very personal, very emotional thing.
Are there any, because we're sort of like, as you said, tip of the iceberg here, are there any sort of compelling or different technologies that you're seeing emerge?
The interesting thing, we see a lot of interesting things, but one of the more interesting things, and again, this goes to convenience and taking the friction out, one of the more interesting sets of things we've seen recently is folks beginning to voice enable capabilities. And I think, if you watch any kind of science fiction movie dating back 20 years ago, everything was voice activated. Transfer $25 from my checking account to whatever. And that has really not been possible up until the last year or so. And now you're starting to see a couple of smaller companies that are stealth, so I can't talk about who they are specifically today, but that are building very slick implementations on top of money movement technology, on top of financial management technology, literally to the point where you can just whisper or speak the command and it will happen. So that, to me, from a consumer perspective, I love that. If I can say, draw down $2,500 on my line of credit, or apply for a loan, or list my house for sale, that's really, I just saved myself hours and hours and hours. And I think we're getting on the edge of that frontier now.
Rich, what do you think about the local economy of payments? How important is that?
Well, I think it goes to this, people are going to pick the institutions they trust. I mean, if you think about restaurants, some of us like national chains, some of us like more local fare. And I think banking, as Joe describes it, and this has been like a seminar listening to Joe for the last 45 minutes. I think he's absolutely right about that. It occurred to me that if voice recognition, I just, what passed through my head was Tom Cruise yelling, "Show me the money." Maybe that's an app.
And Sunny, what about you? I mean, do you think Bitcoin, one of its things is its ability to get to people, and it's sort of regardless of location, right?
Yeah, so it's definitely regionalized how payments work. Obviously, in America, credit cards are very ubiquitous, where in Asia and the underbanked, credit cards have only 20%, acceptance rate, so to speak. And things like in Africa, where there's, the telcos are kind of much more trusted, and they become companies like M-Pesa, in Africa as a way to move money around, things like that. So you're seeing it's definitely regionalized. And hopefully, one thing about digital currency is a way to standardize across the world.
I'll start with Rich again. How is this innovation going to be enabled and brought to market?
Well, I think it's being enabled right now. I think we'll look back and see that this very period was really the Cambrian explosion of new financial services, a new way of thinking about money, a new way of thinking about banking. You just look at the accelerating trends all coming together of venture capital going into FinTech startups, of extremely well-capitalized companies like Apple getting into the game, of the ever greater capabilities of mobile phones with each new generation, with the rise of affluent people around the world and middle-class people around the world and striving people around the world who are going to get a taste of what the internet and internet services and financial services can do. I think that there's always a chance, I suppose, that either the incumbent financial institutions or national governments are going to try to throw sand in the gears of all this change because it's happening too fast. It would be the large banks throwing sand in the gear of financial tech startups and governments throwing sand in the gears of Bitcoin and other like currencies. But I think it's got too much momentum. This has the feeling of something really huge on the order of the personal computer and the internet and mobile. It's one of those big things.
Well, then, in that case, how do you think that the banking institutions are going to react? They will move to integrate some of these technologies, or throw sand in the gears. I mean, you mentioned governments, but
no, I think the more enlightened incumbents will do the best they can, and will find some success in partnering with Silicon Valley firms and envisioning what the greater ecology outside of the walls of their bank looks like with the enablement of all these technologies, these vast new chances to reach customers and so forth. But I expect that there will be banks that won't get it, and they will use the full strength of their lobbying capabilities and everything they can to slow things down. I mean, the Washington is full of lobbyists. You don't join a lobby until you're a mature company. Startups are too busy creating the future to join lobbyists and to think about stuff like that. So that always works in the favor of incumbents. I just wouldn't be surprised if they get panicked about this and try to do what they can to slow it down. And I actually think that governments are even more threatened. If you take away the power to set the value of currency from central banks, you've undermined in a very, very serious way the ability of government to have power over us in so many ways.
Do you think it's important for startups to sort of consider like you said, they're sort of too busy to bother with lobbyists, but do you think that it's sort of important for them to keep policy in mind or put any sort of energy or effort that way?
No, well, I'd love to hear Joe and Sonny address that one. If I was backing an entrepreneur in this space, I would want them solely focused on getting the job done and not ban reading op-ed pieces in newspapers and all of those sorts of things. I mean, that's something maybe for venture capitalists to think about, the financial backers, but you want your entrepreneurs and your entrepreneurial team to be just solely focused, not worrying about sports, not worrying about politics, or any of those things.
Yeah, Sonny, why don't you jump in on that question?
Yeah, no, it's a great question. And obviously the financial sector is ripe for disruption, right? And the issue around that, though, is that, the entrepreneur comes up with a great idea, which can make the banking sector more efficient, and then all the banking rules and regulations come into play. He's got to be PCI compliant. He's got to have a whole infrastructure. It costs a lot of money. There's different state licenses, banking licenses, federal licenses, international licenses, money transfer licenses. And as a startup company, it's very hard to do all that stuff, right? And that's, even though his idea is great, he gets stuck. And that's where if he can find partners with the big banks to help him navigate this maze, that's where the good synergies come into play. Because a startup on its own, it's going to be very hard for a startup to disrupt the banking sector on its own. He needs to partner up with Wells Fargo, and Wells Fargo or Bank of America or JP Morgan needs to find these cutting-edge startup companies in Silicon Valley and help use them kind of as their R&D lab, as Joe said earlier.
Bitcoin is so interesting because in some ways it operates very parallel, but there have been some people who have made inroads. Do you think it's important to make inroads with the banks?
Yeah. So we obviously try partnering up with as many banks as possible. We also deal with a lot of regulations too. We're dealing with the New York bit licensing and all that. Every day, different countries change their policy on Bitcoin. It's one thing, for Apple to disrupt the music industry or for Netflix to disrupt the film industry. It's a whole other thing to disrupt the currency and payments industry of a country. Governments take that very personally, obviously, right? So you got to be very careful with this type of stuff, and that's why the large banks are sitting back too and just watching and waiting to see how this plays out, because no one wants to get in the wrong side of the government, especially some countries like China and things like that.
Joe, I'd love your feedback too. What do you think?
I think we got to be careful not to get ahead of ourselves in this industry, and keep in mind, I spend most of my day thinking about how to get ahead of ourselves. But the reality is, in this particular space, this is not like trading pictures on Facebook. There's a limited number of bad things that can happen if pictures get traded the wrong way. This is about your money, which is ultimately about your well-being, which is ultimately about your life. And so, all those rules and regulations that are enacted by sovereign entities and industry organizations and trade bodies, those are all there for mostly good reasons, assuming good intent when they were put in place, and that's to keep your money safe on a sovereign basis, and then even more completely on a cross-border basis. And so I think as a startup company, as uncool or unfun as it might be to think about trade bodies and lobbyists and regulatory schemas, it's much more fun to think about, hey, what can I build here? What can I do? The reality is, because it has such a profound effect on people, that you've got to think a little bit further forward in terms of how you fit with existing regulations and how you, as a company that wants to disrupt, might influence the direction of future regulations and innovations. And I think we see it every day. On our platform, we have folks who are really far ahead of themselves in terms of what is possible from a technology perspective and a product perspective, but they overlook and leave a lot of potentially dangerous loopholes from a safety, security, data handling perspective. In fact, one of the biggest things we do here at Yodlee Interactive is make sure that the innovations that are delivered around the platform are delivered in a way that are legally compliant and make sense from a regulatory perspective. So I think, as attractive as it is to rush ahead and build new stuff, all of these rules and regulations, somebody didn't just make them up. They exist for valid reasons.
So what are ways do you think that these companies are being enabled to be compliant, to be aware of sort of the greater financial structure?
So if you're talking, I assume you're referring to most of the smaller startups or sort of de novo entries into the industry. It depends on their backgrounds. So some of them are, they've got a good awareness already, and the smarter ones among them have two kinds of lawyers, as much as entrepreneurs don't want to have lawyers. They have the regular corporate lawyer, and then they have the regulatory lawyer. And the regulatory lawyer usually can figure out for them in a pretty short amount of time what regulations apply to their niche of the industry, and then how to navigate those. And then once you've got sort of the basics down, as you evolve your service, and a lot of these startups pivot 2 or 3 times before they really figure out what they're going to do. As you start evolving your product and your service, you can evolve your point of view around the regulations. And then I think we have seen, anyway, most of the entrepreneurs either look at the industry and decide, no, it's too big a task for me to take on now by myself, so I'm going to go try to do this service with a bank or with a different kind of partner who's got better resources than me. Or we've seen entrepreneurs come in and say, oh yeah, okay, I understand where I fit now, and this is how I will build my business to make sure I'm navigating the applicable regulations in a way that are appropriate.
I know that Yodlee Interactive also helps, enable innovations come to market. Can you sort of explain how that works a little bit?
Yeah, I mean, simply put, our platform, and it's a cloud-based platform, is really 3 elements. It's data, payments, and security. And so it's all your financial data aggregated, personal password protected financial data. It's payments and transactions, so there's full money movement capability in there. And so if you think about what you need to do as an entrepreneur in the financial services space, it's largely all predicated on aggregating data and making sense out of it, so analyzing it for some purpose, and then doing something. So once you've aggregated and analyzed the data, you have to take an action, pay a bill, transfer a fund, move money, do something like that. And so if you're an entrepreneur that wants to build a service around financial services, we're a good fit for you because we've got that capability in an API layer, number one. And number two, we are audited and supervised by the government. The OCC is our operative agency here in the United States, so they've got oversight of us as a Tier 1 technology provider to the financial services space. Our platform's also certified in every bank we work with, all right? So that's hundreds of banks that are now running our platform today. And it's the very same platform that's available to entrepreneurs. So if you're an entrepreneur, you can come in and say, oh, well, there's a platform I can plug into that actually knows the regulatory landscape, is accepted by banks, gets data from banks, and works with banks. So if you want to talk about, at least from my perspective, and full disclosure, I'm biased, right, because I've been working at Yodlee, but if you want an easier entry point for your innovation, we're a good fit because we work on both sides of the aisle and we understand the regulations.
I have some questions from the audience. One question is sort of what are some of the biggest hurdles that are facing non-bank entity? I'm going to start with you, Joe. How about that?
Okay. I think the biggest hurdles are really an understanding of the legal and regulatory framework and how complicated that is. And then there's a little bit of baggage that still exists around sort of commercial/competitive competitiveness. And by this I mean the banks have by no means ceded their territory here. They're hanging on to it, very, very tightly. And so I think don't underestimate the fact that it's complicated to build a business of financial services, which is why there is this vacuum that exists today relative to the rest of the digital landscape, which is why there's a huge opportunity, which is why all the money is coming in. So the old saying is, if it was that easy, everybody would do it. It's not that easy, but when you figure out how to do it, you can create disproportionate amounts of value in today's economy.
My next audience question is actually for Sunny, sorry. Sunny, he wants to know, what are the transactional flows of Bitcoin, i.e. the amount of transactions monthly, and how is it growing?
Yeah, so, currently Bitcoin is doing around $60 million a day in transactions. And it's ranged anywhere from 60 million to 400 million. And obviously 2 years ago, these numbers were much more smaller. And around Black Friday, we'll see that probably jump up to like $300-400 million again every day.
Got it. One more question about Bitcoin for you from Sebastian. He asks, how can Bitcoin shake off concerns about stability? It dropped 50% in the last 6 months roughly, if it is to be taken as a serious currency.
Yeah, so obviously Bitcoin's, kind of always in the news about the currency fluctuations. It has dropped a lot in the last 6 months. The ironic part, though, it's up 170% for the last 12 months, though. With BitPay, we work with merchants where we take possession of Bitcoin for them, so the merchants themselves never get exposed to any currency risk. So our customers like Newegg, which sells online computers, when a customer purchases something for $100, Newegg gets $100, we take the Bitcoin. So Newegg never takes any currency risk at all. So for the merchants, they're risk-free in regards to currency fluctuation for Bitcoin.
I have one more question. This one's coming from Bruce Cannon. Joe, do you think you might be able to grab that one? I think he's looking just for specific examples of companies that are trying to displace the lending component of banks.
Sure. So here's two really good examples, both in the small business space. And small business lending has been, for years and years, one of the most profitable sectors for banks. So a company called Cabbage, which is based in Atlanta, Georgia, has done a phenomenal job of displacing traditional bank-based lending, and they do it primarily for small online-based merchants who had trouble in the past getting access to capital. They do it primarily on an alternative data set, so a non-credit bureau-based data set, and they do it in an entirely digital, if not mobile format. On Deck Capital, similar company out on the West Coast, similar profile, similar footprint. And interestingly, not only is the process being sort of taken away from the banks in terms of how you apply for, get approved for, and then receive a loan, but the actual capitalization of that loan has been transitioned largely to the private sector, where we've got a lot of hedge funds coming in and capitalizing, and a lot of other institutional investors coming in and capitalizing loan portfolios where historically they've bought those only in the secondary market. Now they're actually participating as primary lenders and servicers and then reconsolidating and syndicating debt on the backside themselves.
I think we're going to wrap it up, actually. So I want to thank my 3 panelists for coming in. Thank you so much for answering these questions. They've been great.